Well, hello there. I'm Mitch Goldberg. Thank you so much for joining me. We're just kicking things off a little late today, but just a very busy day. You're watching my live stream. It's called Be the Boss of Your Money. It is about personal finance, investing, business strategy, financial planning, all of those important topics to actually mean it, to say, be the boss of your money, because it's very easy for your money to be the boss of you. So I'm so glad you're joining me today. Your time is very valuable. It's precious. So I greatly appreciate that you are spending some of it with me. We're talking about the FOMO market, fear of missing out. And listen, not to be judgmental, I don't want to be all judgy, but is this a market where it's just fear of missing out and people are just throwing money into the market because they see the returns are so good? Or are people making really conscientious decisions? Are we in a safe place in the market? Are we not? And are there moves that you should be making? Because the market is up a lot. You've all by now have seen your December 2020 statements, and you may be wondering, things have gone very well. Should you hold the course, make any moves, commit more money to stocks, buy Bitcoin, small caps, emerging markets, and pot stocks and other newly emerging places for money? I don't want to say they're all investments. I'm not really sure if you call Bitcoin an investment or not, but that's what we need to talk about. So let's roll the quick intro. I'm going to give you some pointers. I'm going to give you some things to think about to help you get through this. Fear of missing out. That's what we're talking about with this market. I'm going to give you some pointers. I've been doing this for a long time. Here we go. All right, we're back. Thank you for joining me again. You're watching Be the Boss of Your Money. Mitch Goldberg is my name. If you are just joining us now, I want to welcome you. We're talking about the FOMO market, fear of missing out. Is it even a FOMO market? Is it fair to say that the whole stock market is in a bubble? And is it fair to say that there are moves that you could make? Maybe some of you, it's a should. And for some of you, it's a need. So if you have any questions, please hit me up in the comments. If you're watching this in the live stream right now, or you're watching now in the replay, I would love to hear your questions. Well, I'd love to read your questions, because I really want to make sure that I answer, that you get value out of this show. And my best content, by the way, comes from your questions. I love that. When you have questions, words of wisdom are always greatly appreciated. Words of encouragement are also. Just want to do two quick shout outs. My friend Alex is out there. Happy Inauguration Day. Yes, my friend, it was a very happy Inauguration Day, a day of hope, a day of renewal, and I want to say a day of peace. Thank you very much, and same to you, my friend. My friend out there, Christian, is out there. First of all, Christian, I am very flattered that you've taken the time to watch my little show here. The audio is sounding great. I might dial it down just a few notches. Yes, you know what? I have the gain up pretty high right now. I will, you know what? I could dial it down a little bit. I locked my settings. Here we go. Okay. I dialed down the gain. It's good to have you, man. Thank you very much. You're like my producer today. Thank you. Okay. So I dialed the gain down a little much. Don't want to come out too loud. I'm not peaking or anything on the sound meters. So let's talk about a couple of things, because today was definitely a day for the records, because we set a new record for the major averages. We've been setting new records like crazy, folks. This is what a bull market looks like. Nothing stops a bull market. As you can see, we've had some pretty heinous news. We've had the crazy election news, an actual president lying to his constituents about the election results. And you saw it happen last week. The stock market, though, has looked past everything. It's looked past this because we're planning for a better second half in 2021. So today was a very smooth day. A lot of investors feel comfortable that we finally uh, turned the page to a new administration without any major disruptions in the transfer of power. Biden's goal now is to hit us quick with a $1.9 trillion stimulus, release a lot more COVID vaccine doses. And if we can get a better plan, because Biden's going to be very focused on the vaccine, which is something we haven't had from the previous president. So this is really very confidence inducing for investors. Will it be justified? Will the confidence be justified? Right now, investors have made their judgment. The answer is yes, but stocks have gone up tremendously. And at this point, I think one of my biggest battles, and you're going to think like, oh, Mitch is the worst salesman. The hardest thing right now is when a new client comes in or an existing client comes in with new money and they love what's happening. They love to see their accounts go up. They put new money in. But I mean, I'm literally buying the same stocks for them in some cases that we bought 6 months ago, 8 months ago, a year ago, and more, because nothing's cheap in a bull market. Not to say that the market's in a bubble. So that's what I want to talk about. We can't know for sure if the market's in a bubble until after the fact. But my experience, which is now 31 years, and I've been through the early 90s, I've been through the 2000 tech wreck, the 2007 Great Recession, and now what you see happening now. So I've seen my share of bubbles, and I do think a lot of the stock market is bubblicious. And I see this in certain areas where money is so desperate. Investors are so desperate for a higher return that they're going into things other than stocks. Now you might say, well, Mitch, why does Bitcoin come off as desperate? Maybe that's too strong of a word. But investors are looking for new returns, and investors expect returns to come at them very quickly. We've seen solar stocks go up. They were already up. I said this about 2 months ago, 3 months ago, but before the election, well before the election, I said, I gave you 3 ETFs that told you that Biden would win, and they were all in clean energy stocks. So let's take a look at today's action. We'll do a quick share screen. I'll make sure I make this a little larger so you can see it. I love this share screen. And then we'll just go through the day's activity, the day's action, give you some perspective. I'm not just here to give you an update. I'm here to give you some perspective, okay? But the Dow up 257, NASDAQ up 52. That's a pretty big day for the NASDAQ. And whenever you see more than 1%, it gets my attention. And S&P up over 1%, NASDAQ up just about 2%, small caps up just a smidge. And the VIX continues to come down. That's a good thing. When the VIX, the fear gauge, comes down, if we could just see that go under 20, I actually think that gives you another boost up in the market just for that. Let's go on. Today was a day that the FANG M stocks, that's Facebook, Amazon, Alphabet, it's Facebook, Amazon, Apple, Netflix, Google, and Microsoft. Even though Google is now called Alphabet, we still go by the G for FANG. These are the 6 biggest stocks. Actually, I think Tesla might have, it's kind of a tie score, I think, between Netflix and Tesla in terms of market cap. Regardless, FANG-M really reasserted itself today with Netflix up 16%, almost 17%. 17% gain for a company the size of Netflix is huge and more or less unheard of. That is a massive gain. This isn't some small biotech stock, with no liquidity and has the potential for that kind of gain for a surprise. But Netflix to be up almost 17% in a day, the FANG M stocks have really reasserted their position as the market leaders. We've been seeing industrials, financials, and energy take the lead, and they had a good day today. Let's not misconstrue that. But even Google up over 5%, Amazon up over 4%, Microsoft up over 3%, Apple over 3%, Facebook over 2% up. These are big gains, and these stocks have definitely reasserted themselves as the market leaders today. Communications was the best performing sector. That's because communications sector is about half Netflix and Facebook. Tech had a good day. Real estate had a good day. Discretionary, industrials. Overall, the only thing that was off a little bit were financials. And I've been, pounding the table and finding value in financials and energy. But financials have had such a big run over the last few weeks that they finally had a little bit of a pullback. Morgan Stanley came out with earnings today. Excellent numbers, excellent report. Stock backed off a bit. It's just that it was factored. And these stocks, that was one sector that's had a really big run. But industrials had a big day. The economically sensitive stocks had a big day. The work from home, stay at home stocks had a big day. So overall, a pretty solid day in the market today. So let's talk about your next move. This could be a FOMO market, fear of missing out. And people are very attracted to the market now, almost a year since the pandemic bottom, and money's coming into the market. The biggest difference, I think, between the stock market now and I'll say the biggest difference from 2019 to 2020, and it's continuing into 2021. The biggest difference is that from 2010 to 2019, investors had such a focus on passive investing, exchange traded funds and mutual funds that mimicked indexes like the S&P 500, okay, or the NASDAQ composite, for example. And now, and by the way, an index, you can't invest directly into an index, but you could invest into a security that tracks or mimics an index. But now investors have really gone gaga. By the way, Lady Gaga sang the Star Spangled Banner during today's inauguration. Maybe that's why I say investors are going gaga. Investors are going gaga for individual stocks. And it's not just the Robinhood traders. It's Schwab, it's E-Trade. To think of it this way, Robinhood are the Gen Z and millennials, and Schwab is their parents. That's kind of the way it's looked at. But people have a real penchant, a real moxie for the individual stocks. So are we getting too carried away? Because when you see the moves happen in Tesla and Bitcoin and lots of other types of investments that have gone up so tremendously, what we really, I think, need to take a look at is what you should be doing personally, because we're not going to know if we're in a bubble, if the market's too high for at the top, until after the fact. So there's a few things we know. If you are accumulating your wealth and you're still investing in your 401k plan or any account for that matter, keep on doing it. If you've got 10, 20 years or more until you need your money, till retirement, till your kids go to school, you just keep doing your dollar cost averaging. That's what happens. And today's market, which is at a record, will most likely look cheap. And you'll most likely say, I wish I invested today, 10 or 20 years from now. As Warren Buffett once said, if you think the stock market's expensive today, wait till you see how expensive it's going to be in 20 years. If you are in a position where you have particular, whether it be individual securities or sector funds, like sector funds that invest in just tech stocks or communication stocks, and they're up a lot, what you could do is think about rebalancing. And you have to pick your own points. But if you have an investment that's maybe more than 5% or more than 10% of your portfolio, maybe it's time to scale some of that back and put the money into something else. Don't be desperate. You don't have to put the money into something else. You could go to cash and wait for your pitch, wait for something maybe a little better. That's one thing to do. If you're just in an asset allocation of ETFs to capture the main sectors of the market, Andrew, I see your question. I'll get right to you. If you're out there just to have an asset allocation between large cap, mid cap, small cap, international, and bonds, and your allocations out of whack because stocks have gone up so much, I think it makes a lot of sense to rebalance, especially if you're comfortable with your portfolio taking on a higher risk profile than you originally wanted, then you could skip the rebalance. I think people though get their beer muscles going when the market's higher because all of a sudden, you have a specific risk tolerance and you tailor a investment portfolio to your risk tolerance. But then your risk tolerance goes up because your portfolio goes up and you feel more confident about the future. But just because the market goes up and it validates the wrong things, you didn't become smarter. You just were right to invest. You were smart enough to invest. That's what I'm trying to say. So I don't want you to um, I don't want you to get carried away with too much risk in your portfolio, is what I'm saying. And a lot of people are saying, gee, I wish I took more risk. But that's after the fact. And if the market tanks 30 or 40%, which we've seen, I've seen that a bunch of times in my career. If it comes out, if that happens ahead of you needing your money, you're going to say, I wish I took less risk, or you're most likely to say that. So these are the things you need to do. Rebalance, decide if you still want to be in individual stocks. Take a look at your stocks. If a company's gone from a $500 billion market cap to a $2 trillion market cap, do you expect that company to be a $4 trillion market cap? Do you expect past performance to give you exactly what you want going forward? It doesn't work that way. But I think the market is vulnerable to at least a pretty significant pullback because so many people are so optimistic about stocks and so much money is in it that we may be missing more fuel, more new money going into the stock market to keep things going. All right. So rebalance is really what you should do. And if you are, if you're getting closer to retirement to a goal, that money that you need over the next few years, my advice to my clients at least would say it's time to consider moving that money in cash, because at some point, some of your money has to just be there for preservation for a goal as opposed to investing it for future growth. I hope that makes sense. Andrew asked the question, the DRIV ETF. Andrew, is that self-driving? I'm going to just see if I could punch that up real quick. Yes, autonomous vehicles, electric vehicles. I think you've been on this for a long time. You liked, we spoke about NEO and a few others in a previous episode. I don't have anything against them, not at all. I mean, isn't it amazing that all of a sudden, old, staid, that nobody wants GM is now thought of as a self-driving and electrified vehicle company, and Microsoft just invested money into GM's project for self-driving technologies. It's just really, it's amazing. So I have no problem with it. I just, as long as it's right for you, then it's right for you. I wish that might not be the answer you want. Like, I can't just give you, I don't think you need me to give you permission to buy it, but there's tons of sector funds. There's pot stocks, there's driving, there's alternative energy. There are so many different sectors to be in that you could give them a shot. Hope that helps. Thank you everybody for watching. Jillian, good to see you. Thank you for that. I'll be back tomorrow and we'll get into a lot more things. I've got a whole outline for this show over the next for the next year. I'm really excited about it. Thank you. I'll see you tomorrow.